John C. Bogle, founder of the Vanguard Group, wrote the Little Book of Common Sense Investing to share the simple, effective investing philosophy he has used throughout his career. The book focuses on building long-term wealth through low-cost index funds. Here are the key lessons broken down into main sections. 1. Invest in low-cost index funds. Bogle emphasizes that most investors should choose index funds over active funds. Index funds mirrors the performance of the entire market, like the S&P 500. Have low costs because they do not pay fees to active fund managers. Are less risky than picking individual stocks. 2. Costs are an investor's worst enemy. One of the book's strengths is that Bogle clearly explains the impact of costs on investment returns. High management fees will significantly reduce long-term returns. Compounding works best when you keep costs to a minimum. For example, a 1 to 2% annual fee can add up to hundreds of thousands of dollars lost over decades. 3. No one can beat the market over the long term. Bogle argues that trying to beat the market is a losing game. The vast majority of active fund managers fail to outperform the performance of the market index over the long term. Predicting the market is extremely difficult, even for professionals. Instead of trying to beat the market, Bogle recommends investing in index funds and letting the market do the work for you. 4. The importance of long-term investing. Bogle emphasizes that time is an investor's best friend. Assets will grow in value through compounding if you are patient and let your investments grow over time. Don't get caught up in short-term market fluctuations. He also warns that frequent trading not only increases costs but also leads to emotional decisions that reduce performance. 5. Keep your investing mindset simple. Bogle's philosophy is simple. Invest in index funds. Let your investments grow over time. Don't try to outsmart the market. Investors don't need complex strategies or in-depth information to be successful. All they need is discipline, patience, and a simple portfolio. 6. Understand the role of risk and return. Bogle emphasizes that there is no return without risk. However, you can minimize risk by diversifying your portfolio, choosing an index fund that represents the entire market, adjusting your portfolio to your personal goals and age. 7. Trust the power of the market. The book reminds us that the stock market has grown steadily over the past decades despite crises. History proves that the market will eventually overcome recessions. Faith in long-term growth is the key to successful investing. The bottom line: be a smart investor. The Little Book of Common Sense Investing is a call for simplicity and discipline in investing. Bogle encourages investors to avoid common pitfalls such as overtrading, chasing trends, or paying too much for actively managed funds. Instead, he recommends: trust index funds. Keep costs low. Focus on the long term. By following these principles, you can take full advantage of the power of the market and build a solid financial future.